Today, we are talking about our audit process, the very first step in that process, which is preliminary planning. So can you kind of at a high level walk us through what that looks like, and then we'll maybe delve into some details a little bit more?
Yeah, so during the preliminary planning phase, we've agreed to perform your audit, and, we're looking forward to having a good relationship formed. So we'll definitely want to touch base and get to know you and get an understanding of your organization. It can vary, so sometimes that preliminary planning meeting we like to have in person. It just helps to have maybe a more natural discussion. It's really a time for you to bring up maybe some areas of concern if you have any areas that you're wanting us to make sure we look into further, and so that we can use that information to plan the audit process that we're going to be doing.
If there were a client that was a little bit, maybe a new client that's a little bit nervous about this very first stage because they don't know what to expect, what would you tell them to reassure them or to help them understand that, we're not coming to or break down the door and tell you everything you're doing wrong?
Yeah, I think at Casey Peterson, we really pride ourselves in remaining independent, but we are there to help you throughout the process. We're available for questions. We would love to talk through things with you as you have questions or concerns. And I think that's very important. There's been several instances, this often happens, where we're there to help you, and it really makes the process easier for everybody if we can identify maybe a certain transaction cycle that you feel like you might need to shore up a bit and want to make more efficient. We can provide some guidance on maybe options for how to do that. It's interesting because I think there's the tendency to be nervous when you're having an audit. And so I think we're always trying to overcome that and make sure that clients understand it is a collaborative process, and for us to still issue that opinion that is independent.
So when you meet with a new client and you're in that preliminary process, are there things that they should or could have prepared at that very first meeting that would be helpful?
Yep. I think you want to make sure that you're at least in the process of closing your books so that you have an idea of what areas might be more risky in a particular year. If you had any new activities, so let's say if you got issued new debt in the current year, probably just have a list of that so that we can talk through and be aware, and at that time make sure that we're letting you know what documentation you'd need to provide for us to look at. Another area that we're required to ask but does make people nervous but shouldn't is we just give you an opportunity to talk about if you're aware of any potential fraud or just anything that would have happened during the year that was maybe out of the ordinary or maybe would have made you uncomfortable. We're there, it's a working relationship, so those are areas where we can plan to look into further and discuss as we're doing audit fieldwork. We don't design our audit procedures to detect fraud, but in the event that something comes up where either we find something that looks off or the client voices that they might have a concern, that gives us a chance to look into it during our normal audit procedures. Maybe at that point we'd be able to say, nope, this checks out and actually it makes sense. It doesn't look like anything weird was going on. But we have had a couple of instances where that does get brought up and it might warrant an additional engagement. So we can do what we call agreed upon procedures. And so you might say, I have a particular concern, can you look into the details of these transactions and let us know what you find? But yeah, it would be separate from the audit in most cases. In terms of how it relates to the audit, you might have a concern with a particular employee. And so in the audit, we're really just looking at the balances as of year end and if those appear reasonable. And so sometimes there might be instances where you might suspect fraud, but as long as it's not affecting those year end balances materially, then it doesn't cause an issue for the audit. There's a lot of room for discussion, and we're happy to help navigate that scenario.
So if there was something where someone was concerned about fraud and they wanted to do an agreed upon procedure and they wanted to also have us do our audit, we can do both of those things.
Yes.
Okay. It's not like an independence issue or any of that where we couldn't do it for whatever reason. We'd have to have someone else do it. Okay.
That's correct. Yep. We're able to do both. Usually independence is an issue if we're helping with the bookkeeping. So think of it like there are two attest services, right? And the agreed upon procedure we would really be, and that can be tailored to any specific situation, but kind of similar in a sense where we're just going to let you know what we found. We're not influencing those balances on your books. We're not telling you what we think they need to be. We would just be giving you the information that you need to handle that situation in the best way.
So we're not fixing your books, but we're just telling you this is what we found.
Yes.
Okay.
Yep.
So we have in our proposals, we talk about the strategy for conducting the audit, and we have the preliminary planning, and then we lay out all of the bullet points that go with them. Here you talked about gain an understanding of your organization. That's the having the meetings, talking to management, or as we say, those charged with governance, talking about the risk of fraud. So then we also talk about perform preliminary analytical procedures to identify significant and unusual account balances, also trends, transaction for audit emphasis. Is that the piece where we're just looking at everything that you've provided to see where you stack up? What's been happening in the last year?
Yeah, I would say one of the most important pieces for the client to be able to provide to us during the planning stage is a trial balance. It doesn't have to be finalized. Maybe you're still in the process of closing your books, but at that point, the majority of the year is included in that activity. And so then going off of that, yes, we're going to ask the client if they have any areas of concern, but what we're going to do is look at the trial balance. And so when we're talking about doing a preliminary analytic, that's what we're looking at. And we'll look from year to year. And so at that point, we might be able to notice ourselves that it looks like they got new debt issued, or, there's quite a bit more revenue this year. So we're maybe going to look into why that happened. What was the cause of that? It's things like that. So that's what the preliminary analytic is. And that's why it's very important for us to have a trial balance to be able to dig into the numbers and not just be going off of conversation, but the two of them together are really important as well.
So you have what the staff or the management is saying has happened in the year, and then actual hard numbers that you compare them to. Okay.
Yep. I would say, too, that when we're doing those preliminary analytics, it's a very overhead view.
Okay, so next up then we have assessing internal controls and fraud risk at entity level.
We did kind of talk about fraud risk, but internal controls are another really important aspect. We have that listed as a separate phase, so that's definitely a subject that warrants more discussion. But just at an overhead level view, we'll make sure that we have an understanding of who the key employees are at the clients, who's doing what, and how the client is making sure that they have checks and balances on their processes. We'll usually draft a memo where we're documenting that, and then as we're performing audit fieldwork, we can refer to that. So it helps everybody get an understanding of the operations and helps things go smoother.
That leads into the next point. Identify significant accounts and processes, routine, non-routine, and estimation. I don't know any of those words. What does that mean?
Yeah, so when we say significant, those would be areas where you have a lot of transactions. I think it depends on what the client's industry is. And so we'll definitely identify that. And then just making sure we're paying extra attention to those areas, if they have a lot of transactions flowing through a certain cycle. Definitely identifying those non-routine transactions. The client might understand that those get entered by journal entry, so it's not an automatic process. It's maybe something that they identify that needs to be fixed or that doesn't get caught in the automatic process. And then estimation would be, it's usually things like investment balances. Those are based on fair market value. So just making sure we have an understanding of what estimates the client is making so that we can be on the lookout for those when we do audit fieldwork.
We talked about conduct team meeting to identify any areas of risk. So is this beyond just meeting management or those charged with governance?
So up until this point, we've talked about we will be meeting with the client to have these discussions. And then internally as a group, we'll take that information and meet as the audit team. So that will include the partner, the in charge, and then any staff people assigned to that audit fieldwork. And then we'll look at that information that we gathered and discuss as a group what the risks are that we need to identify. So like I said, we can devote extra attention to those areas during our audit fieldwork.
So then this next point, this is a lot of words I think maybe people will not understand. Set planning, materiality, and tolerable misstatement.
Yes. So these pieces, like you said, it's audit lingo.
Yes.
Materiality is very important, and we do need the trial balance to be able to calculate these things. But we're going to be looking at, there's a lot of professional judgment that goes into materiality. We'll look at those numbers. We'll identify maybe what the most impactful area of the financial statements is for a financial statement user. So for instance, if it's a nonprofit, they might be pretty concerned with just expenses and where those are going. So we might use expenses as a whole to calculate materiality, but it varies depending on the client. And then that materiality level is what we're going to use during the audit to assess any potential misstatements. So maybe we look at something and we think, oh, that seems a little bit off. If it's under a certain threshold, it might not be worth digging into, right? But we can use those guidelines to help navigate the process.
So as an example, let's say a nonprofit has something in their calculations are off by $5,000. And maybe to them, that sounds like a lot of money. But if we have established early on that materially, that's not that big of a deal. So at the end, we can say like, yeah, this is $5,000. You might want to look into that. But as far as what this looks like for the audit, that doesn't have that big of an impact. Is that correct?
That's exactly right. And we'll usually be having those discussions with the client so that they're aware of it. Like you said, if it's something that they want to make sure that they're catching going forward. But yes, keeping that big picture in mind that we're looking at the financial statements for the whole year. And so that's how we're coming up with that dollar amount of whether it really matters or not.
So then we're agreeing on the timing and deliverables. What does that look like?
So this is very important in an audit process. Our goal is after we finish fieldwork to have your audit issued and done within 8 weeks. And I only say that, obviously it varies, but just to have that in mind because it just does take time. It's quite a large process as opposed to a tax return where that might get done within a week time frame. You know, we're looking at things overall for the whole year. There's quite a few people involved on our audit team and also the staff at the clients that we need to make sure we're connecting with, checking all the boxes. You know, we'll talk about when you would be available for us to perform field work. Normally we schedule that for a week and it can be kind of intensive. We try to be very aware and considerate that our clients are also performing their normal duties during the audit. So we're making sure that you have availability to tend to our requests and answer questions that we have during that time. And then talking about when we're getting closer to wrapping things up, you know, if you would like to have us present to the board, when a good time to do that would be. And again, it's a very fluid communication. You know, we're talking throughout the process as well if things need to be shifted at all.
Because that's an important agreement, I would think, between both our staff and the client's staff to say, if we don't have the materials that we need from you, it's going to affect the timing of when this gets done.
That's a very important point to make. So, you know, a good example of that would be when I mentioned, you know, we really do need the trial balance when we're doing our planning procedures. And if we don't have that, we can't really dig into the meat of the planning.
And then the last step that we list for preliminary planning is issue audit planning documents, including timetable and engagement letter. What does that look like?
Yeah, so this is going to be like the formal documentation that the client's going to see. They can refer back to it as we're doing the audit if they have any questions or things they need to clarify. But once we've gathered all that information, we're going to send you an engagement letter that has it all laid out, and it'll include that timetable of when we expect to be able to issue the audit. And that's going to be a formal letter that the client will review, sign, and send back to us. So then we both have it, and hopefully we're on the same page and can get started.
What does success look like in this phase?
I think success in the planning phase is open communication and taking some time to reflect on why you're required to be having an audit so we can make sure that we're meeting those needs. And that also impacts the timeline. If you're required to have an audit by like a state agency and they need it by a certain time, make sure you're telling us that so that we can meet that goal. And I think that kind of plays into if they had any areas of concern or anything as well, right? It's a lot easier if we can kind of anticipate that a bit instead of finding it during field work when it might create more noise, and if it's unexpected, it might take us a bit longer to navigate it.
So you might not even just come away with, you know, I go into my audit, they're either going to say, this is bad or this is good. You're going to get a lot more out of it than just the audit opinion. You might come away with, an idea for a new process.
Yep.
That's going to be, like you said, a little more shored up, possibly more automated in some way to kind of help your organization grow.
Exactly. Yeah. And to, make your day-to-day easier, but then also hopefully next year's audit, I think even if there is a case where we identify something that isn't quite right, we're going to have that discussion with you and say, this isn't maybe why it's working now, but these are some options for things you can do to improve that going forward.
In terms of the preliminary planning stages, does that look different between a brand new client and a client that you've maybe worked with for 3 or 4 years in a row?
Yeah. So preliminary, if we haven't worked with this client before, it's something where we're going to try to meet in person or, otherwise it's a phone call. But yes, we're getting to know all of your staff. We do have industries that we specialize in, so we probably will have an idea of the basics that are going on. And then going forward, that's kind of a relief as well, right? If we worked together before, it's not going to be that huge overhaul of everything all at once again. We can kind of use our understanding of what we knew in the prior year and build off of that.